Markets surged in April with the S&P jumping over 10%, but the rally seemed to be built on a very fragile foundation. Investors spent the month buying back in, betting on an end to the US-Iran war. However, peace negotiations have been barely crawling forward and downstream consequences are building. Let's quickly recap April. At first glance, the month was a sea of green for stocks. However, the energy market was a more chaotic story. Oil futures were a roller coaster, ending the month up 4%. However, that included a massive 17% drop in the first half, followed by a violent 25% spike to close out the month. Meanwhile, gas prices didn't see that same relief. They held steady before spiking late, ending April roughly 10% higher. On the economic front, the data was mixed. March jobs held their own despite the start of the conflict, and inflation accelerated but mostly stayed within expectations. However, that didn't comfort the Fed. Internal rifts are growing, with some officials now pushing back on the idea of a guaranteed rate cut after the pause. They want to make it clear, rate hikes are just as likely as cuts. So what's the deal? With the ceasefire on an indefinite hold and talks inching forward, markets are essentially pricing in a quick full recovery. That may be a tad optimistic. As we move into May, the market optimism is still there, but we're staying cautious with the stalemate continuing. We're focused on the downstream consequences. Oil remains mixed, and gas prices are still climbing. Even if the war ended today, we expect the economy and consumer are in for some inflationary impact as the global supply chain absorbs the shock. Markets may continue to remain optimistic near term, but we're still looking for some tangible progress towards a peace deal. In the meantime, lots of new jobs and inflation data over the next couple weeks. Stay tuned for more.